right? It was on the way down. And there was a lot of regulations. Obama put in a lot of regulations. Trump gets in and reverses all those regulations. And because there was a lot of coal companies that went out of business, the few that are left are making record profits, right? Again, you got to sometimes understand the interdependencies of that. And if you don't sit back and just watch it happen, you sit back and say, wow, it's pretty easy to forecast, right? But you got to be listening to the news. Because if you don't listen to the news, you're going to hear about it when the stock goes up, and you hear it from your friend that, oh, how come you didn't buy CP Rail? Well, we heard about it, right? So a year from now, 2 years from now, if there's still no pipeline, you're going to see, you would have probably seen the Canadian Pacific railway stocks just climb like crazy. And you thought, oh, we talked about it 2 years ago. How come I didn't take any action? Right? It's all information that's out there. Some people think that you got to get all this secret information. Like, it's all in the news. You just got to know how to read it, how to interpret it. Most importantly, it's taking action, right? Because most of us kind of sit back and go, oh, okay, yeah, so what, type of thing. And then you look back, right? Anyway, keep listening to the news because that's important. Okay, so tonight we're going to be talking about insurance. So we're more than halfway through the course. We only got a few more lessons. Next week, we're going to be talking about government-sponsored programs, and we're going to have a guest speaker come in.
Yes.
From Government of Canada to talk about some of the programs. And she came in last semester, and it was really good. So I think you'll want to listen to that. And then the last lesson will be on fraud, and then we'll have our graduation that night. So we typically have a potluck, so everybody brings food and we eat, and you get your certificates as long as you didn't miss 2 lessons. Okay? Excellent. Okay, so let's talk about insurance. So if you go to page 167, okay? So insurance is a contract between you and an insurance company. When you buy insurance, you pay an amount of money every month or every year, and the insurance company pays you if an accident happens that lowers the value of that insured item. And typically that's in the form of a loss. So insurance works by collecting small amounts of money from many people and paying the few people who have a loss. The amount that the insurance company will pay is in the contract. So people use insurance to protect themselves against big losses like fire or a car accident. And for some insurances, it's dictated by law that you need to have insurance. So example is a vehicle. You can't drive without insurance. If you drive without insurance, you get a pretty big fine. Okay? You can choose to have other kinds of insurance. Many people have insurance to protect themselves and their families from loss. So types of insurance would include property, home, health, travel, vehicle, accident, car, pets, and go on and on. Okay, so let's talk about the different ones. So property insurance protects you against the loss of things such as cars and homes. For example, a fire damages your home, the insurance company pays you to repair the home and to replace things that were damaged by the fire, such as furniture and clothes. So we kind of learned that obviously during the wildfire a couple of years ago, right? A lot of people learned a lot about insurance, about what their insurance covered and what it didn't cover during that exercise. So always a good lesson. Property insurance also gives liability insurance, which means that it pays people who get hurt or have their property damaged when you are responsible for the accident. So a good example is you have insurance on your home, because if you don't shovel your walkway and someone comes on your property and slips and hurts themselves, they can actually sue you. So that's called liability insurance. Okay, that's the example there, that lady falling. Then you have life insurance and disability insurance. So this protects you against lost income if the insured person dies or becomes disabled. Health insurance pays for some expenses that the province's health insurance doesn't cover. So when it comes to health insurance, as you know, we have universal health care in Canada, and each province also covers certain expenses. But to cover other expenses that you might have health-wise, you need to have personal health insurance. Okay, so insurance policies. So the way it works is that you usually fill out an application for insurance, and then you get a policy or a contract. So a contract is a written agreement from the company, and you are the policy holder or the insured, and you are insured against what they call perils. Okay, and a peril is a thing that causes loss or damage like a fire or theft. That's called a peril. Some insurance policies cover all perils and some don't. Exclusions are things that your insurance policy does not cover, and you got to make sure that you know all the exclusions so you don't get a surprise. So for example, in some policies, home policies, they don't cover jewelry, or they cover it only to a certain amount. So if you have expensive jewelry, what you do is you get what's called an extra coverage called a rider, okay, R-I-D-E-R, and that allows you to purchase more insurance to cover that jewelry of that value. Okay, you have a question? Oh no, just you're here. Okay, paying for insurance. The amount that you pay for insurance is called a premium, and the insurance company decides on the premium using information from your application. For life and health insurance, they actually ask you questions about your health, obviously. You may need to have a doctor or nurse examine you, or have a doctor give the insurance company some information. And then the insurance company will decide, based on those questions and the health, on your premium. And it depends on your age. Obviously, the older you are, what happens? You pay a higher premium because there's a higher risk to the insurance company. So one thing about insurance companies is that they don't want to pay, right? Yeah. Right? That's why, like we said before, they have the nicest buildings in every city in the world, the tallest, the nicest, the most lights. That's because you and I are paying for that. They don't like to pay out, right? So based on age, gender. Okay, so who pays higher premiums, male or female? Male. Yeah. Okay. And especially when it comes to car, auto, younger males pay more than younger females. Okay, whether you smoke or not, obviously, most smokers pay a lot higher premiums, and other information that they look at. So they look at things like mortality rates, and women seem to live a lot longer for some reason. I don't know why. Why is it? Huh?
Because they talk a lot.
Because they talk a lot. Oh, wow. You guys agree with that? Less stress? Less stress, maybe? No. That can't be it.
Lower risk.
Lower risk.
Because usually they don't smoke that much. Usually they don't drink alcohol that much. Usually
Okay.
They
They're on the
drive
straight and narrow.
faster.
Yeah.
It's usually.
No, women tend to live longer lives, which is women's what? Oh, drive fast? Yeah.
Good to know.
You can sell her a car now.
No, I said about CMP.
But yeah, lots of things have to do with,
I recall it.
yeah, give me your license plate number. Have to do with age. For property insurance, the application will ask you to describe the property. For example, if you drive your car to work every day, you will probably pay a higher premium than if you only use it in the evenings and weekends. So this is the cartoon. What happened? And the guy says, poor guy, he just saw his new insurance premiums. All right, because sometimes you open up that insurance policy and you look at what you have to pay, and it's like, can't believe it. Anyway, making the claim. So if you have a loss, you make a claim to the insurance company, and you need to show proof of the loss, such as receipts for healthcare expenses, or in the case of a life insurance claim, it's you have to show a death certificate. It was kind of interesting because where I work, we deal with life insurance and death policies, and we had an employee that passed away, and he passed away in a vehicle. Okay, so and they had optional life insurance on him. So now that he's passed away, the beneficiary, which was his wife, would get, I can't remember, like $750,000. But the life insurance company wouldn't pay it out until the coroner's report came out. Okay, so the coroner, you guys know who the coroner is? I don't know what it is in Spanish. The person that does the autopsy on the body.
Okay.
What's it called?
Forensic person.
In Spanish. Oh no. The doctor that cuts the body, right, and finds out. So the reason why. So this lady wanted her money, but we were trying to explain to her that you cannot get your money until there's an autopsy report. Why?
Because it's by like proof of.
Oh no, he's dead. I mean,
like for like, which reason? Which are the reason for
reason, right? And the reason could be, and if it's criminal, then she won't get it.
Yeah.
Right. So try explaining that to someone.
What about if it's suicide?
Well, some policies still cover it.
Okay.
It depends. It depends, but some policies still cover whether it's suicide or not. Again, it depends on the type of policy. But if you do self-inflicted, right, some of them don't cover it, right? But in this case here, she has to wait until the autopsy report comes out that says that it was of whatever cause before they pay it out. So sometimes there's a lot of stipulations. There's got to be proof of that loss. For property insurance, an adjuster from the insurance company will decide on the value of the damage. For health and property, you pay for part of the loss. So this is what's called a deductible. Means that you pay for part of it, or the first few hundred or $1,000, and then the company pays for the rest. Okay, that's called a deductible.
Is that negotiable? Is deductible?
Well, you can talk about it when you set it up, but the higher your deductible, the lower your premium. If you have a lower deductible, the higher your premium. So you gotta think, okay, am I gonna have a loss? And what am I actually paying for that, for having that low deductible, right? Okay, so for example, if your claim is $3,500 and your deductible is $200, you pay the first $200, and then the insurance company pays you $3,300. Okay, who sells insurance? Agents sell insurance for one company. Direct sellers sell insurance for one company by phone or the internet. And then there's brokers that sell insurance for more than one company. So it's no different than mortgage brokers. Mortgage brokers don't work for a bank. They work for you to get the lowest rate from any financial institution. Same thing with insurance brokers. An agent or broker who sells life and health may also sell savings and investment plans, and this is often called an advisor. So sometimes you'll see financial advisors that sell life insurance, and they also sell investments like mutual funds. Well, they do everything. Okay. Group plans are plans for many kinds of groups, like people who work together or people who went to the same university. APEGA has for the engineers. The CPAs have it for the accountants. Union members of a certain brotherhood of electrical workers, that type of stuff. Teachers. So there's all group rates, And what happens is that the insurance company provides you lower rates because it's based on a group. And typically that group is, kind of similar in what they've done over the course of their life and things like that. But it's a cheaper rate than if you went out and got it on your own. Okay. Group plans are less expensive. Like I said, you get a group insurance with your employer or with an association. So those that work with big companies, you typically get a better rate for your life insurance than if you went out on your own. And it's based on the group. Okay? But when you are not a member of the group anymore, such as when you leave a job, your group insurance may stop, and you may be able to get an individual policy that continues the benefits of your group insurance, but it all depends on the type of insurance plan. Now, the other thing about group insurance plans is that it's based on the what happens, it's called the experience in that group. So if you're in a group that has that year a lot of people that die, guess what? Your premiums next year are going to go up, right? So there's always advantages and disadvantages to that. And if you think about it, if you're in a group plan that has a high risk, right, based on the type of work that you do, you could be seeing higher premiums than if you paid on your own, right? So it's not always the best deal, but overall, group rates are typically a lot better. Okay? Any person acting as an agent or broker must have a license to sell insurance in Canada. So you can't just go out and start selling insurance. Just in case anybody thought of doing that. Okay. Some companies offering insurance, such as payday loan companies or car dealers, may not be licensed. So be careful about buying insurance from those. So even I'm sure, I don't know, you work at Toyota, right?
Yeah.
You guys don't sell insurance, do you?
No.
Right.
We don't deal with the insurance company.
Exactly. Okay. Ask the agent or broker's insurance license before you buy. You want to make sure that they're licensed. You can also check if the person has a license by calling the superintendent of insurance or financial services. So always do your homework, whether it's investing, you go through the SEC, Securities Exchange Commission, or if you're buying insurance, check through an association. Okay. You may see an ad offering cheap insurance, but it may not be true. Some people pretend to be insurance agents or brokers. So there's scams out there all the time on everything. So you got to be careful. They tell you that you can have a much lower premium for insurance. They ask you to make a payment or charge a fee in cash or a wire transfer. They may just take the money and not get insurance for it. They may call a real insurance agent and pretend to be you. They lie about your application to get a lower rate. If you don't have a valid car insurance, like we said, the police will stop you, and you will pay a big fine. So you don't never want to do that, or make sure your kids don't. You may have to pay to fix the other car, and for medical costs if anyone got hurt, and this could be obviously thousands of dollars. If an agent or broker fills out an application for you, check to make sure everything is true before you sign it. Never sign a blank form for an agent. If anything is not true in your application, the insurance company can refuse to pay any benefits if you make a claim. So good example is smokers, right? If you are a smoker and you say or declare that you're not a smoker and you pass away, that insurance may be void. So whoever the beneficiary is gets nothing, and you don't get your premiums back. So you don't want to rely on insurance. Okay, buying insurance. So buying insurance, make sure you know what your policy doesn't cover. Ask questions until you understand the exclusions. And again, people found that out the hard way during the fire, right? Realize that there's so many things that were excluded. If you're comparing prices between companies, make sure it's at the same level and kind of insurance. So insurance policies are just as confusing as cell phone plans. Okay? I don't know which one is more confusing. But you got to know exactly, and if you're going to compare companies, right? You got to make sure that you have everything the same so that you can compare. Because one little thing could make a difference of $100 a year of a premium. Okay. An insurance company that has much lower prices may not want to pay if you make the claim. Be careful to tell the truth, like we said on the insurance claim. I like the picture of a Pinocchio there. Nice nose. Okay, again, we talked about that. Changing insurance companies. If you cancel your insurance policy before it comes up for renewal, you pay a penalty. Okay, so it's a lot like mortgages. You can't just say, okay, I don't want it anymore because this other company is going to give me a better deal. If you break that policy, it's actually a contract, you could pay a penalty. If you want to cancel your policy or change companies, tell the insurer in writing. This is very important. And never stop paying the premium until you tell the company, or you will be charged a higher rate because you are at bad risk. If you're changing companies, make sure your new policy is issued before you cancel your old policy. This comes into effect a lot with, with vehicles, right? You never want to cancel a policy before you start another one. Okay, make sure that you have the other one in place first. Okay, because if something happens on that, even the 5 hours that you didn't have insurance, which it could happen, it could cost you a lot of money. Okay, so let's talk about health insurance, because this is the one that's really fairly important. So in Canada, as we said, we have a universal healthcare system, which makes Canada one of the best places, I think, in the world to live. So if you're a Canadian citizen, permanent residence, you may apply for public health insurance. With it, you don't have to pay for most healthcare services. The universal healthcare system is paid through your taxes. So if you remember when we talked about taxes and the different tax brackets, well, part of your money that you're paying to that is going to pay for universal healthcare. You must show your health insurance card to the hospital or medical clinic. Each province and territory has their own health insurance plan. So you want to make sure you know what your plan covers. All provinces and territories will provide free emergency medical services. So if you go to a hospital because you have an emergency, as long as you have a card, you're going to have no problems. There may be restrictions depending on your immigration status, okay? But this is what the Alberta healthcare card looks like. Nice little blue thing. If you have an emergency, go to the nearest hospital. A walk-in clinic might charge fees if you don't live in that province, but typically you can get that money reimbursed. You can buy extra health insurance for things that the government insurance doesn't cover, like buying glasses and prescription medicine. So our universal health care provides just really, I wouldn't say basic, it's more than basic. It pays for a certain level of coverage. Okay, but if you want extra coverage, you have to buy extra insurance. And you can get that on your own or through your company, that type of thing. And we'll talk a little bit about that. I got a star there for a reason. If you have family visiting you from wherever you're from, make sure that you have health insurance for them when they get here. Because if you don't and something happens, it could be very, very expensive, right? So you want to make sure that you get a quote, and you can, you can go through Blue Cross, you can go through different companies to get that. But few companies sell health insurance for visitors in Canada, where you can get some of the basic health care coverage. Okay. Extended health care. Okay, so this is in addition to the universal medical. Blue Cross, for example, in Alberta covers prescription medicine, ambulance services, and vision care. You want to check to see what your policy covers. They have what's called a health plan, and then they have what's called a dental plan. The dental plan covers mainly checkups, cleaning, fillings, dental x-rays. Usually health insurance covers the plan member and dependents. So when you buy health insurance, it covers you and any dependents that you have. And dependents are typically children under 19, but I think it's 21 now, and it goes to 25 if they're going to school. So they can stay on your insurance for that as a family, for example. Or if they're disabled, they can stay on really indefinitely as long as there's proof of that disability. Usually you pay a deductible every year per person, or usually the way that works. Okay. Some plans have a deductible every time you use a service. It's called, for example, when you get prescription drugs, there's something called a dispensing fee. So the dispensing fee ranges anywhere from a couple of bucks to $20 every time you fill a prescription, depending on which pharmacy you go to. Okay, so you know who has the cheapest dispensing fees in Fort McMurray? Anybody know? Walmart and Superstore are pretty low, right? The other ones are pretty high, so it depends. And in some cases, your company plan might pay for that or part of it, but a lot of it comes to shopping around, right? Because think about it, pharmacies, they make their money dispensing drugs.
We have a guy working with us, and he's from the States. He gets insulin. What he pays the amount of insulin is $3,000 US in the US. Here it's only 500 Canadian.
Yeah, exactly. Big difference. Okay. Some plans have what's called co-insurance, which means you pay part of the expense from 10 to 50. Okay, so for example, it could say on drugs, they're only going to cover 80%, and then you got to pay the other 20. Okay. Many plans have a maximum amount you can claim per year, like glasses or massage therapy or anything like that. There's a maximum amount, let's say $1,000 a year, and anything over that you got to pay on your own. This is important. Some plans don't cover expenses for pre-existing conditions. So these are health problems you had before you got the insurance. So when you apply, for example, for Blue Cross as an individual plan, you got to submit a medical. And they ask you all these questions about, did you have this, did you have that, right? Because if you have that, they'll give you insurance, but they won't cover anything associated with that precondition. Okay. You and your insurer how you and your insurer share the cost. So for example, Jane has a deductible of $1,500. The co-insurance is 20%, sorry. Out of pocket is $5,000. So on the first visit, if it's $125, she has to pay the first $1,500. So she's going to pay first $125. Then goes again and has $75 of costs, right? Let's say that she's met her deductible. She pays $15 and the plan pays $60. And then at the end of the year, after many visits, Jane has paid her $5,000 out of pocket limit. That plan now pays $200 and she pays $0. So it all depends on what kind of policy you have and your deductible and the co-insurance in terms of what you pay out of pocket. But at the end of the day, the biggest lesson is that you still have to be a good consumer of your health and healthcare services. Okay, so making a claim. Usually you pay for the bill and then you fill out a form and then the insurance company pays you back. But now more and more pharmacies, massage clinics, chiropractors, they're on direct billing, it's called, with Blue Cross or a company, so that you don't have to do that every time. Okay, so it's paid directly. Okay, you need to have your card with you to show the pharmacy or the dentist, and that's what the Blue Cross card looks like. Okay, so questions to ask when you're getting this is, what does the plan cover? And more importantly, what does it not cover? And do I need to get a medical examination? Because if you do, it may, you may not get coverage, but that's the only way to get it, is to get a medical exam, because they want to know if you've had any pre-existing conditions. How much is it deductible? Is there a co-insurance? And does it cover expenses for a pre-existing condition? Okay, any questions on health insurance? Pretty basic, right? There's a base, certain level of coverage, and then you pay for anything over and above that. Okay, life insurance is another big type of insurance. You may want to buy life insurance to pay for expenses if you pass away. Life insurance is important if you have children or other dependents, so that they will they will have money to live on if you die. Okay, it's really in terms of protecting a certain level of income for your dependents, your beneficiaries. The person who will get the money when you pass away is a beneficiary. There's two types of insurances, life insurance. One is called permanent. Permanent life insurance covers you for your entire life until you die. Term life insurance covers you for a fixed number of years or until you reach a certain age, so like 60 or 65. Okay, term insurance is less expensive in the beginning, but you will pay higher premiums if you renew your policy after it expires. Term insurance is good if you have bigger expenses now and not too money for insurance. Make sure that you have a term life insurance that's renewable, which means that you can, you can renew it at a good premium. Because if you don't, the older you get, as that term ends, the higher your premiums you're going to pay, right? So that's the big difference between term and permanent. Make sure it is also convertible, which means that you can change it to permanent life insurance later without a health examination. Most life insurance companies will let you cancel without a penalty if you change your mind within the first 10 days. If you return the policy to the company within the first 10 days, you get your money back. So things to ask: how long has the company been in business? Because if they haven't been around for a long time, and that's why a lot of life insurance companies have been around for a long time, right? And they amalgamate and they buy other smaller companies, and they've been around for over 100 years. What qualifications does a salesperson have? What is guaranteed in the policy and what is not? What is the difference between the policies you're looking at? For term policies, how much will it be to renew it in the future? And are the rates guaranteed? When does the policy expire? And importantly, does it have a conversion rate? Okay, so let's talk about disability insurance.
Usually they pay easily.
I'm sorry?
The life insurance, usually they pay easily in Canada. There's issue that of course they don't want to pay. Or,
when you say, sorry.
for example, you have a life insurance,
right?
Passed away, and it's for your family. Usually the insurance company pay pretty easy.
Well, you have to, death certificate, right? You have to have proof that the person passed away. And like I said before, there's also have to be proof that it was no criminal intent.
Okay, but if it's like this, they pay?
Yeah.
Okay, there's no issue.
Yeah, no, as long as there's a death certificate that comes from the funeral home, they pay it. Yeah. Disability insurance. So this insurance gives you money if you can't work because you become disabled or ill. Individual disability insurance is very important for self-employed people and people who don't have a group disability plan at work, right? Because if you don't have that, if you're not covered, then what happens if you get ill or sick? There's no money coming in. An employer offers typically short-term or long-term disability, or both, to employees. You may pay your own premiums or your employer may pay the premium for you. So this is kind of important because if you pay the premiums, then when you get the money when you're sick, you don't pay tax on that. If the company provides that as a benefit, the money that you get is taxable. Okay? Makes sense. If you've paid into EI, we're going to talk about that next week when we get into government-sponsored programs. So employment insurance or CPP, you may also get a disability benefit from EI or CPP. So EI or CPP, which is a Canada pension plan, is typically you get a pension when you reach 65. Okay, in Canada. Again, it's a universal pension plan. We'll talk about that next week. But if you get disabled before you retire, okay, you also get a CPP disability benefit. Okay. You may have disability insurance on your mortgage or car loan. Okay, so whenever you're buying, or whenever you have a mortgage or you're buying a vehicle, someone will always make an offer to sell you insurance. You got to be careful about that because the rates on that are pretty high. Okay, no offense to the car dealership. But you could probably get a cheaper one on your own, right? But people do it because it's okay. It sounds like a good idea. Might as well get it. But when you think about it, and if you think about it also, especially on a mortgage, you got to think about it because, well, if someone can't pay for the mortgage, then that makes sense. But if someone can pay for the mortgage because there's still other money coming in, do you really need that? Right? You got to just look at that because it can cost you a lot of money for just that small insurance policy where you can go out and get it on your own. Okay? When you make a claim for disability insurance, all of these kinds of insurances work together. So the benefits you get are typically about 60 or 80% of your income. So what I mean by that is that you can have, and this is why you got to be careful when you buy different insurance policies, is that you can never make more than 100% of what you were making when you were working. So what ends up happening is that what's called a first payer and a second payer, right? And they will offset money so that you don't get more than 100%. Okay, so just a little bit about how short-term and long-term disability works. Okay, I'm just talking about some group plans here. So the way it works is that you have short-term disability. So this is if you get ill, injured, or sick. And typically the company will pay you either full pay, and then after some amount of time that you're on short-term disability, it goes to something like 50% or 75% of your pay. And this short-term disability is typically a period too. Some companies it's 6 months maximum, others it's a year. Okay? So if you can be on short-term disability for a year, and after a certain amount of time, you make less than what you were making full-time, but you're not working. And then you apply for what's called long-term disability. And typically the long-term disability is with an insurance company, right? Like Great West Life or Manulife, Sun Life. And if you can't do your job, right, based on the medical information that you submit, then you go on long-term disability. Okay? And usually you stay on long-term disability, and remember, you're only making this, whatever it is, whether it's 50% or 75% of your salary. Okay, so let's say that you're making $5,000. Okay. If you get a CPP benefit, disability benefit, let's say it's for $2,000. Okay. Well, Sun Life is only going to pay you $3,000, so that you still only make $5,000 total. Okay, it's an offset. After 1 year, this is called a definition date, change of definition date. And what they say is, okay, if you can't do any job, so this first hurdle here was you can't do your own job. So if you're an electrician, you can't do your job, you're on LTD. Once you get to 1 year, they say, okay, if you can't do any job, right, then you can continue on LTD. But if you can do another job, then you come off of LTD, and you typically have to go back to your company, and the company has to look for a job for you. And if there is no job, you might get what's called a severance, which means that they pay you off, they give you a lump sum, and you're gone. Okay? And that's sort of the law. Okay? It's called a duty to accommodate. Okay, so companies can't terminate your employment because of your disability. It's discrimination. But you're no longer disabled if you can do any job. Okay? But the company has to look for a job for you. And again, if there is no job, and if it pays less, then you get paid less working with the same company, for example. But if there is no job, they can let you go, and that's okay. Okay, so that's how, and remember, whether you tax on this $5,000 depends on what? Right. So if the company pays for your premiums, and you pay a tax on this. If you've paid for your premiums, then this is tax-free. Okay? Okay, so very quickly, and then we'll take a break. Types of disability insurance. There are 3 kinds of disability insurance: non-cancelable, cancelable. Policies mean the insurance must renew the policies, and the premiums can go up. Guaranteed renewable policies can go up, and then there's commercial policies that let the insurer refuse to renew the policy. The insurance can also charge premiums when you renew. Okay? Then there's what's called accidental death and dismemberment, which means if you accidentally die, okay, so not a natural death, but an accidental death, or you have something that's dismembered, right? So think about what happened in Saudi Arabia, right? What they're saying, they're saying that that person was dismembered. Okay, if you ever lost a limb, an eye, a finger, a leg, okay, hearing, accidentally, then that's what that insurance covers. Okay, now the thing to be careful about if you buy A and D is that you have to lose, like the ones that I know of, is that if you just lose the tip of your finger, you get nothing. It's got to be right here. That's right. So if you're going to do something because you're trying to collect money, make sure that you do it right, or you won't get paid. Okay. If you lose eyesight, it's got to be like, I think like 90% of the eyesight. It can't just be, I can't see, I got to wear glasses. Okay. So all these policies have all these rules around them, and you got to understand when you buy them what it covers and what it doesn't. That's why accidental death and dismemberment is cheap insurance, but that's because it rarely pays out. Okay. At Syncrude, I think in the last 12 years that I've been in that area, I think we paid out once. Right? It's not a popular insurance, right? Because people again don't accidentally die, and it's even harder if you dismember something, okay? The big one that's becoming very popular is what's called critical illness. And what that is that it covers you if you become disabled because of an illness such as cancer, heart attack, MS, and you survive. Okay, that's the key. You have to get that illness and then you have to survive. If you survive, okay, then you get paid out. So here's some interesting things. 82% of victims survive their first heart attack. 1 in 4 Canadians will develop some form of heart disease during their lifetime. 1 in 3 will develop cancer during their lifetime. 1 woman in 9 will develop breast cancer during her lifetime. 75% of victims survive their first stroke. 50,000 Canadians suffer a stroke every year. So the probability of suffering a critical illness is a lot higher, obviously, than accidental death and dismemberment. So it's becoming more of a popular insurance for people over the last, I'd say, 25 years. Okay? So surviving a life-threatening illness such as a heart attack, stroke, or cancer often imposes more of a financial strain on a family than a death, if you think about it. If you make it through that illness, life changes in a lot of ways, obviously your health, but just as important, it could be financially too. Okay? So what this does is that you get, let's say, a critical illness policy for $50,000. You have a critical illness and you survive that. And each one of those illnesses has a different survival term. Okay, it could be 45 days, it could be 15, most of them are 30. If you survive, then you get that $50,000. And you can do whatever you want with it. And that's the good thing about it. Like some people have to remodel their home, right? They have to put a stair lift. They have to do something. Some people just want to blow it on their kids, their family, right? Take the trip that they always wanted because, you know, it could be a critical illness that could come back, right? You can do whatever you want with it. So it's not like insurance, health insurance, where, you know, you buy medicine and you get reimbursed for that. This is, you get it, and it only pays once, okay, for that illness. They're becoming very popular. Long-term care helps to pay for care if you become very ill and you need to be looked after 24 hours a day. Some plans pay benefits based on loss of income and some ability to work. Some plans pay if you can't work in your own occupation, like we talked up there. Some in any occupation. Okay. For example, a plan may pay benefits for 2 years. I give you the 1 year example. If you can't work in your own occupation after 2 years, they will only pay you if you can't work in any occupation. Okay. Critical illness insurance pays the whole amount in one payment. So questions to ask: how does this policy define a disability? Will I get paid if I can't do my current job or any job? Limitations: how long will I get the benefits? How will I get paid? If I go back to work part-time, do I get partial benefits, and are the benefits taxable? Okay, let's take 10 minutes and then we'll come back. So 10 after. No. You guys okay? Tired today?
I just wanted to ask you, I just had a customer today.
Say that again.
I just had a question because our customer where I know, and he got some problem with his spinal cord. He got a problem with his spinal cord.
Spinal cord?
Yeah, and it was with a long time. And after now, before when he had surgery, So, and why we're complaining because companies say they're not anything. Is it possible like a long-term disability?
Well, it all depends on what the benefit that the company has, right? So he works for a company. Or what?
He used to work, and that's what I asked. I said, was he working when he got the surgery? He said yes, because he was working.
Yeah, so it all depends. Some companies don't have benefits for that, right?
Is it possible? Like to working in a big company like some
Well, no, not the big companies have it, right?
Yeah, that's what I was.
But for example, let's say if you're working at Tim Hortons, I don't know what their disability plan is, right? Even
He
that's
was
big.
working on a site, that's what I know. I was just kind of
But
confused.
small companies, let's say you work for a small family business,
Yeah.
right? As a contractor or something. So you have to get them on your own, right? If you don't have, if the company doesn't own them.
But like Central Care,
Oh, yeah. Yeah, that one there is the Synchrony one.
I'm gonna check it for sure because that just gave me question in the morning.
Yeah.
So I haven't checked it.
Yeah, no, usually if they're working for a company, now it's not a contractor, right?
No, I totally understand. It has to be employed, right?
Yeah, as an employee, so for example, in St. Croix, we pay for TD and LTD.
Yeah. But the LTD is just for 1 year or longer term?
Well, like I said, you have, it starts at 1 year,
Mm-hmm.
but then if you can't do any job, it continues until
So the person gets paid even though
Yes.
until he.
dies or turns 65.
Okay. Okay. That makes sense. I think, membership.
Up at 5 and then worked all day and then
But you can.
Make a mess in the neighbor's
so I'm
house.
taking the trash out this morning. The wheel of the trash can caught his Halloween decorations. He just wrecked them. I was like, oh, what a
I
start.
woke up this morning. Oh, goodness. Prices are like Halloween decoration.
No, don't worry, don't worry.
Yeah, then I found the text. So I'm sorry. Like, I'm
Going to take.
So,
So say my
kids.
name at the meeting.
you give Mike a-
Yeah. I was like,
Three outfits, 2 dot 3. I'm so used to getting up at 7 night now, it's just. That's why.
For me, yes. Yeah, for you, yeah.
Yeah.
This food support has just to fill the pay.
More sleeping.
It's not too far away, but I guess.
It
Yeah,
works.
But in the morning, 30 minutes. And in the morning, yeah.
Well, you gotta get up, you gotta drive down there, right? Before you can start.
Yeah, go big.
I don't need to long in the mornings, like I know, one of my friends, he needs like an hour and a half before he goes to work. I'm up and away. Just to get out, get the shower, breakfast, like that hour and a half in the morning. Yeah.
Yeah, there you go.
There's a guy saying about that. Should be in
It's gonna be.
Yeah, that's the one. Yeah.
6 months.
6 months old.
Like,
It's like tough to do that.
Oh, that's fine. He's not.
First couple of days is hard.
But you know, I couldn't get was why was it the guy who was doing it, he was like 8 at 2 o'clock in the morning, he was finishing, and he would be until like
And then the
11 o'clock in the afternoon. Why
we are
would I have to
asking
do
now.
that? So why could they not stop at 6 o'clock tonight? Yeah.
So, I mean, I just had a question, like, if I want to volunteer as a waiter, I need to pay by 750 here? Yeah, by 750. Yeah.
So you actually have a coffee, okay?
Yeah.
No, you can only have tea, water.
check out.
Black coffee.
Yeah.
Black coffee, yeah.
That kind of fills you up.
Well,
And then,
That's not a feeling today, that's for sure.
Was the,
this
like,
conference,
one day on,
what
one day
is
off.
going to start 7:30?
It's crazy, 24 hours.
The conference.
You work for him
So the registration.
for some time after that.
Oh, I mean,
Yeah.
so if you're gonna eat the same calories.
Try one day. Like you say, it's gonna be hard.
You can do it. Let's stop.
8:37.
Okay, you guys want to sit down and we'll get started? So some people were asking how long does the LTD go for? So as long as you're totally disabled, it goes to typically age 65, or until you return to work, or unfortunately if you pass away before that. Okay, but you have to qualify every year where you can't do any job to continue to get the LTD. Okay? And you can't really get fired from your job during that time if you're totally disabled. Okay? So the next thing I want to talk about is travel insurance. So this is important too. So travel insurance can include trip cancellation, lost baggage, emergency medical treatment, and accidental death insurance. If you have group health insurance, it may include travel health. Okay, you can get travel insurance from an insurance or travel agency, auto club, or bank. A lot of credit cards now cover emergency travel insurance. Check to see if your policy covers you for the whole time you are outside of Canada. Always check to see if the policy excludes medical emergencies from pre-existing conditions. So that you might have a policy with some of those credit card companies, but it may not cover you if you had, for example, a critical illness that you survived, had heart attack, anything, complications arising from that. If you're in another country, it's not covered. So some policies cover all family members traveling together, and some you need policies for each person. So you need to understand that. Important. Travel to some countries may not be covered by the policy. So if you look at the contract, it'll say for these countries, if you travel there and you get injured, sick, ill, you're not covered. So usually on Government of Canada's website, you'll see the countries where the Government of Canada is saying, there's don't go there, right? Those are the kind of countries that you wouldn't be covered if you bought medical insurance for them. Okay. Some policies have exclusions like dangerous sports, war, or alcohol and drug abuse. So if you go parasailing in Mexico and hit the side of a building, okay, check your policy first before you go parasailing, because you may not be covered. Okay. The other one that I found, which is very important, is policies have maximum benefit amounts or travel time limits. Okay, so what do I mean by that? Some have, for example, 30-day coverage, and then they have 60-day coverage. And it's pretty cheap typically, but you'll buy 30-day coverage because you say, well, I'm not going to go for a vacation more than 30 days. But think about what could happen. If you go on vacation, let's say 3 weeks, and you get hurt on the 21st day, okay, follow me, you're in Mexico, and you have this insurance, and you can't travel back to Canada, you're going to be covered from the 21st day to the 30th day, and then on the 31st day, you're not covered anymore. Okay? It can be very expensive. I've seen a couple of cases where we've had employees at Syncrude that's what they did, and they weren't covered from the 31st day. So your best bet is always to buy 60-day coverage. It's not going to cost you much more, but you're covered then for 60 days. And typically what it is it's when you're covered in another country, it's only for emergency purposes to get it under control. And then typically the insurance company you bought the insurance from is trying to get you back into Canada so you can get care here. Okay, but be very careful about that. And you should always have that when you're traveling. Okay, making a claim, carry a copy of your policy or the insurance company's telephone number. If you have a claim, call the emergency number. If you have coverage through more than one policy, the first insurance company you call may be able to coordinate the whole claim for you. Try to get the medical bills and other papers in English or French, because you might need that. You may have to pay the bill yourself and then get the money back. Some hospitals outside Canada may bill the company themselves, but not necessarily. There's been cases where if you don't show them your credit card, you don't get any service. Okay, that's typically what happens in the States. Usually you make a claim with receipts to your provincial health care, keep a copy. When you get a payment from the provincial plan, make a claim to your insurance company for the rest of the money. If you have a claim, tell your insurance company right away. And if you take a long time to tell the insurance company about the claim, they may not pay the claim. So you want to do that as soon as possible. Okay, let's get any questions on travel insurance? Pretty basic, but it's something that if you're traveling, you want to have because it can get very expensive. Okay, home insurance. So home insurance covers loss, accidental losses like fires and burglaries. It doesn't cover items that are damaged because of ongoing problems. So if you have a leaky roof, you don't fix it, and then all of a sudden it collapses, guess what? You might not be covered under your policy. It doesn't cover things that you should prevent, like indoor pipes freezing. Home insurance can cover the building and the contents, everything you have inside the building. Usually you need to show proof of home insurance to get a mortgage. So this is one issue that some people had during the fire. They got insurance on their home. And then after they got the insurance on their home, or the mortgage, sorry, they canceled their insurance. And then they didn't have insurance on their home. Now the insurance companies ask for that. Sorry, the mortgage companies ask for that once a year to make sure that people have insurance. You decide how much insurance to buy, add up the cost of replacing the building but not the land and all the contents. Okay, comprehensive policies cover the building and its content for risks, except for risks that are excluded. Basic or named perils are less expensive. They cover only the perils that are written in the policy. Broad policies are less expensive than comprehensive. Okay, and some insurers offer no-frill policies for homes with physical problems that don't meet the standard of regular policies. So it's like there's not much on there. Okay, you have three types of coverage. One is called actual cash value. So you can insure your property for the actual cash value, which means you get the amount that your property is worth when you make the claim. So for example, if you bought a TV 2 years ago for $700, you may only get $200 now. You have replacement costs. You insure the property for what it costs to replace the TV. So you get $700 for your TV. And then replacement cost endorsement, you pay extra for the replacement cost, which means you get enough money to buy the same item now. So if that TV is now $800, you get $800. So you see the different types of insurances and how people during the fire got caught in some of they didn't understand what they had. So you want to understand what your policy covers. And if you want more coverage, then get it now. Don't think that you're going to obviously get it after the fire or something happens. Usually the contents are insured for the actual cash values unless you pay extra coverage. Usually the building is insured for replacement costs, and there are usually limits on valuables like computers and jewelry. So questions to ask, what's covered by the policy? Again, what's not? Always ask what's not covered, and you'll find out a lot of information that you probably wouldn't have known. Will I get replacement costs? What are the limits on the valuables? Do I have a deductible? Do I have to pay a certain amount up front? How much money can I save on my premium with a higher deductible? Always ask that. Okay, if your deductible is $500 and this is your premium, okay, how about if I move it to $1,000? What's my premium going to be? And then you can make a decision. It's a good idea to take pictures or a video of your home so that you can show what you lost if you have a fire or theft. Okay, so one of the biggest issues or things that people had to do when they lost their homes in Fort McMurray was make a list of everything that they lost. And I mean everything. And you know how painstaking that can be, right? So a lot of people, either, did this, or if you should do it, take a video of everything very quickly so you have that. Or else it can take weeks and it's very stressful to try to remember everything that you had. Right? Because insurance companies want to know model numbers. They want to know the year you bought it, how much you paid for it, all that kind of stuff. Right? Keep a purchase receipts for big items. Keep your pictures, list, and receipts in a safe place, not in your home. So a lot of people put it on a thumb drive, keep it in, somewhere, either at work or wherever, at a relative's place. If you have roomers or boarders who are not related to you, their property is not covered by your policy. So if you have tenants living downstairs, they need to buy their own insurance for their content. Same thing happened during the fire. Some people didn't have that. So when the place that they were renting lost in the fire, they lost everything too. Okay? If someone gets hurt by accident, you are legally responsible for the accident. Your home insurance will pay for damages you legally have to pay. The accident could happen in your home or anywhere in the world. Your personal property is usually insured while it is temporarily away from your home, anywhere in the world. Okay, so if you have an expensive camera and you take it with you, you go to Colombia, you start taking some pictures, and then the camera falls and it breaks, you can actually get that covered, or someone steals it. No one would steal that in Colombia, right?
No.
No, nowadays.
No. We're talking about it's Venezuela. That's what we're doing.
Sorry?
In Venezuela, they would steal.
Oh, no.
No,
The
no,
rest.
no, no. Okay, not in South America.
Safe place.
Not in South America at all. We got to go to India. We got to go other places.
I don't think you can use it in Venezuela. You don't have a chance.
That's right. Oh, yes. Interesting. Okay. So if something is stolen out of your car while you're traveling, you can claim it on your home insurance up to a limit. So making a claim, if you have a problem and you want to make a claim, you call your broker or agent. If there's a theft, you must also tell the police because that's a criminal event. You should also stop any additional damage by shutting off the water supply. For example, if you have a broken pipe, you can't just let it go on and then claim damages. Okay. Take pictures of the damages. A claims examiner from the insurance company will call you about your claim, and they will come and take a look at it. They're called an adjuster. They'll look at the damage, and then some adjusters work for insurance companies and some are independent. Don't fix anything until the adjuster has seen what happened. Okay. Ask the insurer before you throw away anything that was damaged. Okay. Home insurance payments. How much will you get paid by your home insurance? You purchased a Maytag refrigerator 3 years ago for $700. That is worth $350 today. To purchase the identical one today, it would cost you $950. Right? So replacement cost endorsement, $950. Right? Actual cash value, different. Okay? So tenants insurance. If you look at tenants insurance, your landlord's insurance doesn't cover your personal things like we talked about. You buy tenant insurance that covers your personal property for losses from theft and damage. It also pays for losses if you're legally responsible for damages you do to the building or someone else getting hurt. For example, bathtub overflows and the water goes into the apartment below yours, your policy would pay, not the landlord's policy or the policy of the tenant in the apartment below. It's your policy. Okay. Basic liability pays for losses if you or your guests cause damage to the building. So if you have a party, right, things go a bit wild, that's covered under basic liability. Contents coverage replaces your personal things if they get lost or damaged. Okay. With tenant insurance, your personal property is usually insured while it is temporarily away from your home, like we said, anywhere in the world. Okay. Questions to ask, insurance policy, and the other question, what's not covered? Always ask that. Will I get replacement cost of my property? What are the limits? What's my deductible? Okay, so let's talk about car insurance, because it's a big one that people have. Okay, some provinces like BC, Saskatchewan have government-run insurance companies or plans. So you don't buy insurance from insurance companies, you buy it from. Alberta does not. That's why we buy ours from insurance companies. Okay. Private insurance company also sell insurance. You must have liability on your insurance to cover losses you may cause to other people from an accident. If you're injured, if you want, you can buy collision insurance to pay for damage to your car, or comprehensive insurance to cover theft, vandalism, and other questions to ask. What kind of insurance does the law require me to have? What other coverage can I buy? What will it cover? What will it not cover? Will I get a rental car from car insurance policies? Have that, right? If your car is being repaired, you don't have a car now, you want to make sure that's in your policy because it's very convenient. Does the insurance cover me when I'm driving a rental car? That's always a big question because every time you go rent a car, they always ask you, right? Do you want to rent? Do you want to buy this coverage for $18, $30 a day? Adds up a lot. Okay, that's how they make a lot of money. So you want to make sure that your car insurance policy has that covered so that you don't have to buy it. If you're in a collision, always call the police if someone is hurt. If there's a lot of damage, or if other people may have, or the driver may have broken the law. For example, someone is caught drunk driving, you want to call the police. Don't deal with it yourself. Write down the police officer's name and badge number. The police officer will get all the information from all the other people in the accident to give it to you. If you don't call the police, move your car to the side, make sure you're safe. And if you can't move your car, turn on the hazard lights. Write down what happened, the time, the date, the place. Obviously, take pictures now that you got your phone. Make a drawing of the accident, or get the names and addresses of people that were involved in the accident. If there's any witnesses, get the names and contact numbers of those individuals because you may need them, especially if you have to go to court. Okay, don't say you caused the accident or promise to pay for anything. Okay, just don't say anything. Keep your mouth shut. It might be hard, especially if you're the kind of person that likes to talk about. Call your insurance company right away if you're in an accident. That must be reported to the police. Some provinces have no-fault insurance laws, so each driver claim benefits from his or her own insurance company. Then the insurance company at the at-fault driver, the one who caused the accident, pays back the other insurance companies. Okay, making a claim. If you're going to make a claim against another driver, tell that person as quickly as possible. A claims examiner from the insurance company will call you about your claim. This person will look after your claim at the insurance company. Again, just like in the home, the company will send an adjuster to come and look at the damage. Don't fix anything until the adjuster has seen what's happened. The insurance company may want you to take the car to a repair shop. Usually they'll tell you where to go, which repair shop, but they may also give you a choice. You may have to go to a couple. If you have collision insurance, your insurance company will pay for the repair or replacement cost of the car. The insurance company can also choose to give you the cash value of the car, the amount it was worth right before the accident. So if it's an old car and it's going to take $10,000 to fix it, the insurance company will say, you know what, here's like $2,500. That's all it was worth. So that's what happened in the fire too, right? Some people, had old homes, whatever, the replacement cost, they didn't have the insurance, they just gave them a payout. Okay. Okay, using insurance. Your premiums will increase if you make more claims, so be careful to prevent losses. So some companies have, one at fault claim before your rates go up. Others will do it right away. And remember, once your premiums go up, guess what? They rarely go down. Okay. Things that you can do to make your premiums go down. Get deadbolt locks on your outside doors at home so thieves can't get in easier. Turn off your car's engine and lock your doors, even if you're just going to a store for a minute. My brother, a couple of years ago, when he went to get gas, right, left the car running because it was cold, went inside to pick up his lotto ticket because he was going to win the lotto that weekend. Planned it, went outside, and someone took his vehicle. Found his truck a week later, damaged. At the end of the day, it cost him money because the replacement on the vehicle wasn't as much, right? So, don't do crazy things, right?
Did he win?
Huh?
Did he win?
He did not win the lottery, which made it even more expensive. Okay, completely close all the windows, install an alarm, install an ignition or fuel kill switch so that after a certain time just kind of stops. Park in well-lit locations, install a vehicle tracking system. Now a lot of vehicles come with that. Remove all valuables. Always put things in the trunk. You're going to go somewhere because people look in there. Install a locking fuel cap. Reason why is because people can damage your vehicle. They can put sugar or something in your gas tank, and it causes your motor to get damaged.
In some places, they were stealing it.
Or stealing it. Yeah, yeah, it's crazy. You know,
It
you
takes
gotta,
money too.
you got to be careful. Lock all the doors. Install a steering wheel locking device. Okay, some people have that. You know, the club there, that red thing. Okay. Never leave the vehicle running unattended. Okay. Your premiums may go up or down, or you may have problems renewing your insurance if you have claims. Check every year to see if your insurance needs have changed. You may need more insurance. Problems with insurance. You must always try to fix the problem first by talking to the company yourself. If you can't fix the problem, you can get help from what's called an ombud service. You can't go to court about a problem while you're using the ombud service. And the ombud service, if you've already been to court about the problem. Okay? So if you have a problem with anything to do with insurance, home, auto, or business insurance, you can call that number. If it has to do with health insurance, it's that number. Okay? We'll go through that. I think we're done. Okay. Any questions on insurance?
I'm not sure if you touched on it. What happens if you're in a semi-detached house and one side of the house, your neighbours have a fire, they're not covered, and the fire caused by their house damages your house?
Well, you're going to be covered,
You're covered.
but only to the value of your house, right?
And vice versa.
Yeah, so what's going to happen is that the insurance is going to pay you out some money either to fix it, but it all depends on what happens on the other side
Yes,
too,
if
right?
we had a fire in our house and it damaged the next door neighbours and they didn't have the coverage, that would affect them. Or?
No, but it's going to you're going to have the
Yeah,
coverage,
okay, that'd be covered.
right? So your insurance company is going to have to pay for the damage because it can't decide, right? But if it was the other way around, then you would get money from their insurance company, right?
Yeah.
Or your insurance company may pay, they'll sue them, they'll get the money, but you may not stay in that place anymore because they may not be able to build, right? But you'll get the cash value, 400,000, 500, go build your own. Okay?
We got a series of flooding basement
Right?
area in Tivoli and some places because of the sewer backup.
Right.
But I thought that it was impossible that the 21st century could happen.
Right.
But anyway, we were surprised in 2013 and 2015.
Yeah.
But so you're supposed to call the insurance company first, but they say also that if you know the phone of a restoration company, you can call the restoration company too. Because it was through a backup. For example, in my street, there was like 10 flooding. So, of course, you call a restoration company because to get it adjusted, it's not like this, it's not the right way. So, if you call a restoration company, they come to your place, they remove everything because they're going to charge you for everything.
Yeah, but don't you call you have to call your insurance company first though, right?
Yeah, but if you can't reach it,
If you can't reach the insurance company?
because I called tried the insurance and it was early in the morning, I couldn't reach them.
Yeah.
And my neighbor said to me, call this restoration company.
Yeah. So you have to do whatever you do to get the emergency under control.
Yeah, because it's been bad.
Yeah.
It has to be as fast as possible. But then the insurance company say, but you have a restoration company coming, and of course they take out everything because they want to charge you more
Yeah.
for the insurance. But,
So in that case there, every insurance policy is going to be different.
and the second one, we got help from the municipality.
Yes, because it was their fault.
I don't know, but when it's through a backup, it's fault of who? Because they build too much, because it's not the pipe are not that big and they build too much.
Well,
It's
that's
not
why I'm
the
saying
fault.
if
Yeah.
the municipality paid for it, they're realizing that it's part of their fault.
It was their fault first too, and before too. But
Was this on Brett Drive?
well, I'm close to Brett. I'm on Berard
Okay.
Crescent.
Yeah, and
But it was
Timberley,
Berard.
they've had quite a few problems with
Yeah, but then
that.
they fixed it, and unfortunately, just after the fire, because I thought they're not gonna work on it anymore because they were working on Lucia put a
Bigger
huge
one?
one and on bread too. Said they're going to stop, but no, they kept on doing it. And knock on wood,
Everything's okay.
because it was terrible for the neighborhood. Every time it was raining,
Yeah.
like in June and July, you were expecting a flooding.
Yeah.
Which is kind of not normal. It's annoying.
Well, also in Edmonton, in the River Valley, it floods. So there's some insurance companies that don't even insure places there anymore. So you got to be careful again where you buy,
Yeah.
right? Because there's insurance companies just won't insure you.
Or they put you a slow limit.
Yeah.
And let's say 20 grand in Formac is nothing.
Yeah, exactly. Yeah. So you want to be careful of, again, where you buy, do your homework, because you may not be able to get insurance. If you go to the next part, we won't go through this because it's just a, but I put this in after the fire, obviously, this thing here, and it's on how to prepare for a wildfire, and on page 206, it just talks about document your property. But there's 3 things that you should learn from that. Document your property, which means take pictures, videos, numbers, whatever. Understand your coverage option. Ensure that you have appropriate insurance for relevant hazards. Okay. So read through that because I think that's a really good, a good thing for you to do. So the next thing I want to do is talk about. Can we go to the wills thing? I just want to talk briefly about wills. WILLS. People heard of that? Okay. So, though most people are aware that they need a will, the majority of us, about 70%, don't have one. People put things off for many reasons, but it's important to know that writing a will doesn't have to be a complicated or expensive task. And once it's done, you can rest easier knowing that your wishes will be followed after death. Okay, so this is what happens in the course in the case that you pass away in terms of who gets what. Okay, so a lot of people don't think about that, or if they think about it, they don't have a will. And if you don't have a will, then what happens is it goes through what's called the Intestate Act. Okay. And every province has one. And the government determines how your assets or your estate gets divided. Okay. And it usually, we'll go through this, but it usually starts with your spouse and then your children. But going through this process costs money. And typically lawyers and make money off of it. So if you want to reduce that, then you want to have a will. And the will says, okay, I want this to go to this person, this to go to this person, and it's easier, okay? So what is a will? Can you just click on that? Thank you. Just go down, sorry. Oh, there it is, okay? A will is a document that is created to help you make your loved one's decisions at the time of death. The will contains important direction as to your wishes for your funeral. It also contains direction of dividing your estate amongst your loved ones. Your will can also help to name someone to be left in charge of the children. So that's the important one. Because what ends up happening is if you don't do that, then the government determines where your children go. Okay. The will simplifies the legal process for the lawyer, which will result in minimizing legal costs that your family will encounter if they have to go through that. One of the most important aspects of the will is that it will prevent family bitterness. Right? So sometimes families get into a lot of fights after you're gone because they fight over people who are greedy. Right? So if you don't want that for your family, you get a will. What if you don't have a will? There's no specific person responsible for making your funeral arrangements. This can make coordination of funeral details very difficult. If you die without a will, you have died what's called intestate. Your property must go through a probate process in order to have the legal title to the property transferred to your heirs at law. Applicable state or provincial statutes define who your heirs are. The law of the province that you live controls the distribution of the personal property. Okay, if married, and this includes widows and widowers, the property is distributed to the relatives in the following order. All to your issue to your children, grandchildren, great-grandchildren, if there is any. If none, then all to your parents. All the issue to your parents, your brothers, sisters, your nieces, nephews. If none, then all to your grandparents. So it goes down this list. Aunts, uncles. It doesn't have pets here, but there's people that leave their stuff to their pets. Okay, but it goes on and on. Okay, so if you don't want that order, you should get a will. So you can say, I want this to go to this person, this to go to that person. Okay, making your will, making your will accomplish what you want, and it isn't necessarily complicated. To make a will, you must be at least 18 years old. Okay, and you must have a sound mind, which means you have to be in a good state. Okay. Do I need a lawyer to make a will? It's strongly advised that you use the services of a lawyer to draft the will, but you can also do it on your own. I would suggest that you don't do that. You can also get lots of stuff on the internet where you can print off and do it. Don't do it because it can be contested. So if certain people in your family feel that it wasn't right, or if they didn't get as much as they thought that they should get, okay, they're going to contest it, and it's going to go to court anyway. So spend $3, $4, whatever it takes, $500 to get it done. What makes a legal will? An adult of sound mind is entitled to make a will. The will must be typewritten or computer generated. You can't just write it out in your handwriting, no matter how nice your handwriting is. Okay. The document must expressly state your will. You must date and sign the will. Okay. It must be signed by at least 2 witnesses, and they must watch you sign the will. Okay. They don't have to read it. They don't even have to understand it. They just got to see you sign at the bottom. You don't have to have your will notarized. Okay. In Alberta, though, if you and your witness sign an affidavit before a notary public, you can help simplify the court procedures required to prove the validity of that. You don't have to file it with the court. You can actually file it with the lawyer that put it in place, or you can have a copy in your safety deposit box. You can give a copy to your executor, so the person that's going to take care and coordinate what happens when you die. You can give it to your parents, your brother, whatever you want. Okay? Any questions on the will? Important to have.
Do we have this document?
No. Would you like it?
Yeah.
We can send it out to you. We'll send you the link.
Okay, well, thank you.
Okay.
Thank you.
Or we can even get a copy for next week.
Sure. Yeah.
Yeah, it's pretty basic, but it's pretty important information, and it has to do all with the topic of insurance and making sure that you've taken care of things. Okay, lots of information. Any questions? Clear as mud. Okay. Well, next week we're going to talk about government support programs. Have a good week. Hopefully you can come to the conference, and we'll see you next week.
Thank you very much.
If like imagine